As a property investor, I've got lots of alerts set up on Property 24 to let me know whenever new stock comes into the market. And today I received a very, very interesting property that I'm going to be analyzing with myapp.property to show you what the returns look like. Now, I must just warn you that this property is super risky. I haven't viewed it. I haven't done any due diligence. So all the numbers that you're going to see now are based on what the ad has said or what the agent has said on the ad. So please don't go make a buying decision off the back of this information. This is not financial advice. I'm merely just showing you how you would use the application myapp.property to analyze your deals and what kind of thinking goes into analyzing a deal. And this deal does look really attractive and the yield is some of the best I've ever seen. So let's get into analyzing this deal. I educate people to reach financial freedom through property through cash flow positive investments, specializing in the low income multi-let residential market. So this is the property. It's a hotel in central Johannesburg. It's a bit of a mixed use. You can see some spaza shops or retail at the bottom and then the hotel at the top. So it does look a little bit dodgy. This is probably not the kind of investment that I would do. I don't have the risk appetite for this. I mean, this is crazy, eh? This is the room that they rent out per day. I mean, that's tiny, eh? Kind of reminds me of my days at uni where I had not a room this small. I mean, I had the single bed and a table and built-in cupboards, but it kind of, it kind of reminds me of a really small living space. But this is intense, right? The reality is Joburg Central is filled with people. I mean, it's the most populous town in the whole country. So there is need for this. I think the demand for this kind of affordable night rentals is supreme. And also your eviction process is not really needed because you don't have long-term renters, right? People are staying for 1 or 2 or 3 nights. And if they don't pay, okay, you lose out on a couple $100, but you're not sitting with long eviction processes. So it's got an interesting story. But for me personally, I don't, I wouldn't want to really venture into this. This kind of gives me that slum landlord kind of vibes. Although I think if it's operated well, if you've got a good managing team, you could do really well. And this is a, predominantly cash business. Your tenants will be paying you cash and not necessarily paying you through debit orders or whatnot. So, if you're not wanting to be 100% with the law and not declare everything to SARS, there's a bit of a tax opportunity there. Not that I recommend that. And please always get legal advice and know the risks that you're taking. And then you've got some shared bathrooms. So it's, it's not a deal that I would do. I would definitely not recommend this as your first investment or, unless you've got serious risk appetite and experience in this market. But this is selling for 3.8 million. It's in Clark Street or Kirk Street. So it's got 68 rooms with 9 toilets at 150 Rand per day. I think you are going to be fully let all year round. And then there's 3 shops at 60 grand per month. So the total and potential income is approximately 250 per month. I mean, that's quite a serious amount of money that they're saying. Obviously, I want to see proof of income, proof of expense, and that kind of stuff. But if we work on 250, let's imagine that is true. Times that by 12, divided by the purchase price of 3.8 million, that's a yield of 78, almost 80%. I mean, in a year and a half, you've made the amount of revenue that it cost to buy this property. Now, remember, people don't sell assets, they sell liabilities. So the question is, why is this owner selling? It's probably because it's a headache to manage. It's probably a liability in terms of how hard it is to actually get that revenue. But if they're getting this amount of revenue and it's a good asset, they wouldn't sell. Okay. Anyway, we've looked at the deal. We've got a bit of a sense of what's happening. Let's see. Rates and taxes is 4.2. Levies is 0 because it's a freehold. So I go to myapp.property. This is a revolutionary app. You need to download this thing. Not download it. It's a web app. Go research it. Myapp.property. It'll change the game in terms of your analysis process. So I'm going to go here to my advanced deals. I want to analyze this bad boy. Okay. So we'll call it Joburg Hotel. And I'm going to put the URL in here for later review. Acquisition costs. Okay, they're asking 3.8 million. You make your money when you buy, which means we're not going to pay 3.8 million. I'm going to go in cheeky and put 2.8 million. And then the market value is probably 3 million. I'd have to confirm that with a Lightstone report or sales comparables or something like that. The transfer fees. So now what I can do here is I can open up my transfer calculator and I can say the purchase price is, what did we say? 2.8 million. And we're going to buy it in a PTY. Our transfer fees are 93,000. So I'm going to just round it up to 100,000. And then renovations, I mean, it looked like they needed a bit of work. I'm a big believer in maintaining a product or providing a good quality product to attract good tenants. So I'm going to put about 10% of the market value aside. So 300,000 is what I would put. Finance, the bank is not going to touch this. So it's going to have to be a cash purchase, or maybe you could look at something like, a boutique finance firm or commercial finance option. Cash flow. Okay, I'm going to work on the 250,000 Rand. Obviously, I need to get some sort of proof of income, but let's just assume that that is potentially what you could achieve. I'm going to work on a 70% occupancy rate. So I'm not going to work on 250,000 as revenue. I'm going to work on 175,000 as revenue because I'm taking a little bit of, risk off the table. Management fees, you're probably working on a 12% managing fee. And then maintenance, I'd also work on 12%. Levies is 0. Your rates and taxes is 4,227. Insurance, I don't know if an insurer would insure this, but if they would, they'd probably charge you about, I'd say maybe 5,000 per month. Water, refuge, sewage, electricity, you're probably looking at, 5,000 per month. Security and cleaning, 2,000. And electricity, let's go with 5,000 as well. All right, these are just guesstimates. I obviously haven't done my due diligence. I'm not interested in this deal. I'm not going to be putting an offer forward. But these are the questions you'll have to ask when you go through your due diligence stage with the agent. Other inputs, we want to be doing a projection of 20 years, so we need to put some escalations in place. Capital growth in Joburg CBD is minimal, if any, so I'm going to work on 2%. Rental growth, it's probably going to stay with inflation, so I'm not going to put any real growth. And I'm going to use a discount rate of 10% and some sensitivity levels of 10% on either side. Let's go to the summary tab. Okay. So first of all, overview, getting about a 26% discount to asking, 6% to the market value. Here are the high level offer numbers. Some scenarios. So we're looking at the bear, which is your pessimistic, base, which is your neutral, and bull, which is your optimistic view. This is the gross revenue per year. So 2.1 would be our base case, which gives a 75% gross yield. I've never seen that. I've never seen a gross yield that high. When I see 30%, I get excited. 75% I've never seen, which is actually why I really wanted to analyze this deal, because it looks on the surface like it could be very, very attractive. So we'll have cash flow of 900,000 in year 1. So we go to our returns. Yeah, I mean, internal rate of return of 34.15% is insane. I've never seen that before. When I see a 20% IRR, I get excited. But risk and reward, two sides of the same coin. And, the risk that you're going to be taking buying into, middle of Joburg CBD and doing short-term rentals like that is very high. Net yield of 28%, net present value of 14 million. It'll take you 4 years to pay back your capital. That's crazy. So if we go to the project cash flow, this is my favorite graph because it shows you your cumulative cash flow. So the cost of your cash outflows and your cash inflows. And you can see that after year 4, you start breaking even. So you've paid off the cost that you incurred to buy this thing, and then you're just getting pure profits. So if you've got the risk appetite, the right team, and the right kind of knowledge of the area, this could be an incredible opportunity. Could be a really, really great investment. I hope you like this video. Don't forget to give it a like. Also, subscribe if you like my vibe. You want to join the tribe. Let's go. Discover the power of deal analysis with my app. myapp.property. With this tool, you can analyze all types of property deals like commercial, multi-lets, and even student housing. Analyze cash flows, understand market trends, and assess risks, all with a few clicks of a button. Our tool simplifies data, making it accessible and actionable. This tool will help you save time, it'll enhance your decision making, and you can even learn the insider secrets of the cash flow market in South Africa. Some of the features include calculators, things like transfer fee, income tax, and affordability calculators. Analysis of deals giving you the cash flow, return on investment, internal rate of return, NPV, and all the financial metrics you need to make an informed decision. And with a click of a few buttons, you can generate a professionally designed investor proposal to help you raise finance for your next deal. Take your investing to the next level. Register at myapp.property today.